Hello, everyone. Thanks for joining us on this Wednesday, and welcome to this educational presentation. Now, today, I want to talk to you about my favorite technique for trading stocks. This is really a powerful way to trade any stock, whether it's going up or whether it's going down. And even if you're an intraday trader or a weekly bar type trader, you can apply this technique to any market, any time frame. For example, let's look at this chart right here. Here is a chart in AVGO. Now, this was coming into the first week in December. Now, most traders with limited knowledge would say, well, Steve, there's nothing happening. We are basically in a range market. And it looks like we're in a range market. Obviously, we're going up to a specific point, and then we head, back down, and then we go back up. So most traders would avoid this and say, I'm going to wait for, maybe the earnings to come out, maybe for that, economic news report to tell me if the market's going up or down, or just kind of wait and see and let it tell me what to do. Well, here's the thing. The market actually is telling you what it wants to do all the time in advance. The only trouble is we're not listening to the correct tools. We're not listening to the market in front of us. We're actually listening to outside sources like economic reports, like earnings reports, like some guy in a chat room. But these things really have no high levels of consistency. Now, with what I'm going to be teaching you today, you actually could have seen that there was a buy signal generated here by basically listening to the market. Another one right here, and then finally another one right here, where you could have taken advantage of any one of those three buy signals, even though we were in a range market, and potentially captured upwards of 90 points within the following days, okay? Now, in order to achieve these setups, what you need is something that actually listens to the market, a specific tool. And that's what we're going to be talking about today. This tool is something that I learned over 45 years ago when I started trading on the floor of the exchange. And the good news is it's going to be featured in our new course. This is the new Elite Stock Trading College course for 2022. So I'm going to be sharing with you one of the things that I will be talking about in that course. Hopefully you'll be able to sign up and learn tons more about how to apply this to your own specific style of trading. So welcome to this class. Once again, my name is Steven Primo. I am the president and founder of Specialist Trading. And about 15 years ago now, I teamed up with Pro Trader Strategies with one goal, and that was simply to educate traders around the world. And I'm happy to say that we're doing that in over 115 countries, and in virtually every state in the United States, we have students that are trading our methods and techniques and hopefully are taking their trading to new levels. Now, what I'm going to be doing within the next few weeks is actually presenting the college course that deals just with stock trading. And it's basically using the things that I have learned in my 45 years of trading that I took from the trading floor. These are all techniques and methods that I learned some 4 decades ago that I continue to use in my own personal trading, and that I really feel will increase your odds for consistency, because they really are grounded in listening to the market and in being in sync with whatever the market tries to do. So many times I've heard new students tell me, well, Steve, this guy promised me the world and said that, we would pick the top and pick the bottom. And, maybe I had 1 or 2 good trades, but then I gave away everything, right? And that's basically what usually happens to a lot of students that come on board. But here's what we teach. We teach you how to apply things so that you can be in charge of your own decision-making process. That's the cornerstone of everything we teach as Specialist Trading. And you'll see that attention to detail in today's educational class. Now, before we begin, as usual, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this particular technique for stock trading today. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, another way to get more education on a daily basis, if you'd like to, is to simply follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. I would recommend copying that because I post different information on a daily basis, anywhere from signals that our strategies or techniques have generated to little bits of financial wisdom. Just posted something on Roku right now, a really great tweet about how traders mostly lose money by not applying a specific tool. So there's lots of great free information. Please feel free to follow us on Twitter. Now, remember, as I stated, we're different from other webinars you may have attended. If you've come here today thinking that I'm going to tell you what I think the market's going to do in the next week, is it going to go lower? Is it going to make new highs? You've come to the wrong place, because remember, as I just stated, the cornerstone of all of our education is to put you in the driver's seat. In other words, we want you to make a decision. We want you to decide and to say for yourself, this is what I think the market's going to do. The one question I always tell my students never to ask is, what do you think of the market? Because when you ask someone or something else what you think of the market, you're basically saying, I don't know what to do. I don't have enough knowledge. I don't have enough experience. I don't have enough training. So why don't you tell me how to trade? And think of any other endeavor, any other career, any other hobby. Would someone ask that? Would a doctor say, hey, listen, how do I operate here? What do you think I should do? Or would a lawyer say, hey, how do you think I should conduct myself in court? What do you think I should do? You would never expect to hear anyone say that. But traders do that on a daily basis. You go to a website, you go to a chat room, you listen to someone on TV so that they'll tell you what to do. You're basically telling all these different categories that I don't have enough information, I don't have enough knowledge, so why don't you do it for me? This is really why most traders, in our opinion, fail. You're giving away your power. And so our goal at Specialist Trading is to teach you these things that have stood the test of time so that you can make your own trading decisions. You see, a good mentor will never trade for you. He'll never give you signals to trade. He'll never tell you what to buy or what to sell. He'll never tell you what the perfect market is or the perfect time frame. That's up for you to decide. So therefore, a good mentor teaches you how to trade. This is what my mentors taught me some 45 years ago when I was struggling tremendously on the floor of the Pacific Stock Exchange. But what has sustained me, I believe, for my 4 decades plus of trading, hopefully I can do the same with you. Now, in today's educational class, we just have a few announcements before we begin. First of all, each and every one of you will be sent a link to this webinar recording. So you can watch it at your own leisure. So not to worry if you have to leave early or if you're having technical issues, you will each get a link to this recording so you can watch it whenever you like. But one of the things I like to do is I like to take questions at the very end. I know some webinars take questions with each and every slide. I don't want to take all of your time today asking and you to give me questions whenever you like, because we'll be here far too long. I simply want to teach you this great technique today, and then I'll take your questions at the end. Most of it is so simple and so easy to understand that most of you will understand totally how to apply this in just a few minutes. Now, lastly, remember, since we switched over to Zoom here, a lot of people that are attending for the first time think that this is an interactive presentation where we're all going to see our snapshot or our headshots and we're all going to be talking whenever. No, this is just more like a webinar. This is not like an interactive type process. So this is a static PowerPoint presentation. So please remember to disable all your cameras and especially all your microphones, because we're only going to be asking questions via typed in question and answer at the very end. Okay, so you use your chat box to type in questions at the very end. All right, so you got all those things down. With that stated, let's begin today's educational presentation. I want to start off with what my mentors taught me, because remember, when I first started trading, I make no secret about this, some 45 years ago, I struggled tremendously. I was most likely doing the same things you're doing, listening to news events. We didn't have chat rooms or trade rooms then. We didn't have the internet, but we had newsletters. So I was subscribing to all of them. I was waiting for the earnings to tell me what to do. So basically, I was doing the same thing that we teach our traders not to do, which is put your faith in outside sources. I didn't trust my own knowledge. I didn't think I was experienced enough. And so every once in a while, something would work, but then I would most likely give it all back. And so I wasn't doing very well at all. And my mentors taught me these few things about becoming a successful trader. And this is what I want to share with you today. This is what I learned some 4 decades ago on the floor of the exchange about successful trading. First of all, successful trading should be non-subjective. All right, that means 2 traders looking at the same chart, the same market, the same time frame, doesn't matter what it is, they should come up with the same analysis. But how often do you see someone tell you about a stock or a market and say, oh, this is going straight down, it looks terrible. And someone else will say, oh, no, this is going up, it looks really well. This is something you have to buy. It's because they're relying on very subjective, very discretionary ways to analyze the market. We don't believe in those things. We don't believe in that type of subjectivity. What we believe in is having things that are very black and white, very non-discretionary in terms of just basically guessing. We do want you to use your discretion, but in terms of the insight and knowledge in which you've learned, but not in terms of guessing like, well, I feel lucky today, I think I'll buy everything. No, that's the way most traders trade. So it should be non-subjective. Two traders looking at the same chart, using the same things that I teach, would come up with the same analysis, okay? Secondly, successful trading should be consistent. I know a lot of you think that consistent means that there's a tons of winning trades, right? Well, hey, if Steve's stuff is consistent, that means his trades never lose. That's not what consistent means. I always say this, but people fail to realize consistent means that you have an awareness that you will have losses. It's almost the exact opposite of what people think consistency is. It's an awareness that you will have losses, and that is perfectly okay. There's nothing wrong with losing. That's like saying, a baseball player should never strike out. Every baseball player has struck out. That's like saying an actor or an actress should never have a flop movie. Every actor or actress has had a movie that hasn't done well. But a consistent actor or actress is able to recoup that terrible loss of a movie and come back with an even better movie so that they are still very consistent in their career. An athlete is able to come back and hit a home run, a couple of times later at bat, where he's able to recoup for those strikeouts he had. It's no different when you're trading. It's okay to have a couple of losses every once in a while, as long as they're minimal and you keep them in tune with your capital size. But you don't want to continue to lose over and over again, the way most trading platforms and the way most trading systems are. What you want to do is have a small loss or two here or there, and then a trade that's able to recoup those losses. That's a consistent method, and this is what we teach, consistency. Thirdly, successful trading should be as simple as possible. I've said this before in the past, where when I was struggling tremendously, I was just reaching for anything. It was almost like someone in quicksand. I was just reaching for anything that would help me get back on track. And I remember spending $7,000 or $8,000, and this was roughly 45 years ago, so that was a lot of money for me then. $7,000 or $8,000, which would be comparable to about $20,000 now, on a system that was supposed to be fantastic, that never failed. It was amazing. Now, sure, the first couple or two trades did do well, but it was so ridiculously complicated. I couldn't understand what the heck I was doing. In fact, I had no idea what it was based off of. It just was so complicated. There were so many rules, upwards of 10, 14, 15 rules, and things changing when different environments change. It was ridiculous, and I couldn't trade it. So even if it may have been a winning trade, it doesn't matter. If you can't physically trade it, if it's too complicated, if it just doesn't meet your needs, then you won't make money. And ultimately, I lost money because I couldn't figure out the rules. I was always second guessing because I didn't understand what was going on. So it should be as simple as possible. Most traders I know that have been trading for 20, 30, 40 years trade methods that have maybe 3 to 5 rules, tops. That's it. And lastly, here's the most important. Successful trading should make you a part of the process. This goes back to our cornerstone, what we talked about before, in that you have to be in charge of your trading destiny. You don't ask someone else, hey, what do you think I should do here? What are your thoughts? Do you like this market? Once again, you don't want to be in that position because you're telling the markets, I don't know what to do. And if you don't know what to do, you shouldn't be trading. You should have enough confidence in learning these things and your trading being non-subjective, and it being consistent, and it being as simple as possible, that you have the confidence to make your own decision. Whether someone else is saying, oh, why would you do that? That's going to do the exact opposite. That's okay. You have the confidence to pull the trigger because you've studied, you've researched, and you feel in charge of your own trading destiny for the very first time. If you incorporate these 4 things, this, in our opinion, is the only way you can become a successful trader. You have to do these things. Now think of it. How do you make your own trading decisions, okay? Do you ask someone else? Do you go to a service that gives you buy and sell signals? Do you read a blog that tells you what to buy or sell? Do you watch all the guys on TV telling you what they think of the market? All right. Is your trading consistent? Do you have a couple of good trades followed by 10 or 15 losing trades? All right. Is it simple? Do you have so many rules and requirements? It's almost unimaginable how you can get a signal because they all have to be met, right? Are you in charge of the process? These are all things that you need. Now, here's the good news. The tool I'm going to be talking about today incorporates all of these 4 categories. It's non-subjective. It's a binary type of function. It's very consistent. It's extremely simple, and it also makes you a part of the process. And that tool I'm talking about is the PET-D. This is what we're going to be featuring in a special week in the Stock Trading College for 2022. And we're going to be talking about different ways to apply it, different ways to use it. And let me just share with you what the PET-D is, because I know a lot of you people, I see we have some new people today in today's class, are not familiar with the PET-D. This was a tool I was first introduced to some 4 decades ago by my mentors on the floor of the Pacific Stock Exchange. Here's the trouble with the PET-D. We had to figure it out at that time because we didn't have high-speed computers or programmers. We had to figure it out by hand on a handheld calculator. And it was extremely cumbersome, very difficult to apply, and you could only use it on an end-of-day basis. But the PET-D has now been altered into a proprietary algorithm because we've taken all the hard work out of it for you. We're keeping the calculation and the formula in-house, and all we've done is modify it into a color bar tool. So it's going to change the colors of the bars. That's all it does. The bars are either going to be colored green or red. It's that simple. So there's no hard, cumbersome formula to figure out. There's no hard work on your part. The only thing you have to do is apply the process. Now, one of the best ways to use it is as a signal confirmation tool. This means that whatever strategy you're trading, whatever method you want to use, whatever market, whatever time frame, if you apply the PET-D, it can confirm your signal, and we feel it will increase your odds for success and consistency tremendously. But here's the best thing about the PET-D, and here's the best way to define it. What the PET-D really is a translator, because that's what it's doing. It's translating on a tick-by-tick basis what any market, any time frame wants to do at that moment. I mean, think of it. Remember, most traders make their decision listening to an outside source, some guy on TV, an earnings report, okay, the support and resistance levels, institutions. We've all been taught to listen to these things, but we've never been taught to listen to the market. And most students will say, well, I don't know how to listen to the market. I mean, how do you listen to the market? These are just bars in front of you. Well, what we need is a translator. The translator is the PET-D, and it's the best thing I know for determining what the short-term trend is. Because the PET-D literally translates what any market on any time frame wants to do. So let's look at this chart here in Zion, okay? Now, you don't need a translator to tell you that the market's going down. So right at this point, if you had the stock, you'd probably sell, or if you're more aggressive, you'd probably short it, right? And then look what happens, okay? This is the way most traders trade, a day late, a dollar short. How could the translator have told us in advance what the market wanted to do? Well, on our platform, the PTS Primo charts, click on PET-D, and we see now that we only are going to see 2 colors, either red or green. If you see a series of red bars, that's telling you, translating to you, that the market wants to go lower. All right. Now see how we knew in advance, well before we made these lower lows, the market was telling us, the translator was telling us it wanted to go lower. Now, once we had a series of green bars, you see how the market was being translated through the PET-D that it wanted to go higher. Now, here's one of the things most students have difficulty with. They don't, look at this and say, well, this is great, so I can pick the top and the bottom with the PET-D. That's not what the PET-D does. It's not a predictive tool. It doesn't tell you how high or how low something will go. It doesn't give you any type of signals. It's simply a really finely tuned translator that tells you what the market wants to do. Now, if you apply a technique, you can get signals based on that technique. But the PET-D is just translating what is. That's all it's doing at the moment. But once you know, you can apply any technique, any method, any strategy that is in sync with that direction, and you will tremendously increase your odds for consistency. Okay, so here's what we want to do today. We want to talk about a trading technique using the PET-D. Now, I know a lot of you will say, well, Steve, what's the difference between a technique and a strategy? Aren't they the same thing, or a system? No, I always have to explain this. A strategy has a full set of rules and requirements that need to be met before a signal can be generated. In other words, you need to know about stop placement. You need to know about money management. You need to know about precise entries. You need to know about precise exits, and you need to know how to protect your trade. Those are all important pieces of the puzzle that go into the making of a strategy. Whereas a technique is just one of those pieces of the puzzle. In this case, the technique I'm going to be sharing with you today is telling you where to enter. But we're not going to be talking about stop placement. I know a lot of you are probably going to ask at the very end, well, where do I get out? Where do I exit? Where do I take my profit? Those are all explained, and they're going to be explained in detail in the college. But for now, this is a technique. It's not a strategy that comes complete with entry, exit, stop placement rules. It's just a technique, just one of those pieces of the puzzle that we're going to be talking about today, okay? And everything you're going to be seeing today is going to be going through a step-by-step process. So we're going to make it simple so that you fully understand how to apply this. All right, step one. Obviously, you want to apply the buy-sell line. Now, if you don't know what the buy-sell line is, it's the 50-period simple moving average. That's all it is. But what this does is it tells us the overall trend. Okay, now a lot of traders always say, well, Steve, I always find it better for me to find the overall trend when I use a higher time frame. Feel free to go ahead and use that, but there's absolutely no need. In fact, I tweeted the other day, there's absolutely no need to use two different time frames when determining the trend. All you need to do is apply, firstly, the 50-period moving average. That tells you the overall trend. So if you're trading a daily chart, there's absolutely no need to look at what the trend is on a weekly chart. If you're trading a 5-minute chart, there's absolutely no need to apply a 60-minute or a daily chart to find out what the trend is. To me, it's just a waste of time. I have personally found no consistency in using that method. To me, it's an urban myth, but I know tons of traders swear by it. And if you feel you need to use it, then go ahead. Remember, we're not here to tell you how not to trade. We only teach you things that have stood the test of time. And in our opinion, the best thing you must first do is apply the 50-period moving average. And here's how we want to apply it. On our platform here, as we look at this chart in SGEN, we see that it's gone straight up and then straight down. So most traders would say, wow, well, the trend has changed. Look, we have this doji here, and now we have these big down days. So I guess this is a downtrend now, right? But what we do to determine the overall trend is on our platform, click on buy sell line. And remember, it's simply the 50-period moving average. So click on 50-period moving average and ask yourself, where is price in relation to that 50-period moving average? If the closes are above, then the overall trend is up. And if the overall trend is up, we are only looking for buy setups. To see how we've taken the subjectivity out of it, it's black and white. If price is above, we're only going to be a buyer. We're only looking for buy setups. You see, you never have to say to yourself, wow, is this going down or should I buy? Or this guy on TV says it's going lower. There's no need to listen to that. The market is telling you by applying the 50-period moving average that if price is above, we should only have a buyer's mindset. Now, this does not mean by any way just to simply buy at the market. You need some structure. So we're going to add that structure with step number 2. We're going to plot the PET-D. On our platform, once again, how simple it is, simply click on the PET-D here in our upper green strategy tab, and the colors will automatically change. Now, here's what we're looking at. The overall trend is up because price is above the 50-period. And at this point, these bars were green. They were outlined green. So the overall trend was up. Even on this down day, this large down day, what was the color of it? It was green. So even though we had a large down day, the PET-D was translating that the short-term trend was still up. So all these green bars above the 50 were telling us that the overall and the short-term trend are in sync with each other. You see, there's no need to have two different time frames. See how simple that is? Everything is one click away on one chart. No need to look at 2 different, 3 different types of charts, different moving averages. It's simple. Keep trading simple. Once again, that other category we talked about. Now, at this point, on this final bar, it turned red. Now, it's red not because it closed down on the day, because you can have up bars that are red. It's red because the PET-D now is saying that the short-term trend is down. So here we have a conflict. The short-term trend is out of sync with the overall trend. All right, but this can set up for a nice technique. So this leads us to step number 3. The final step, as long as price is still above the 50-period moving average, we're going to buy when price trades above the previous PET-D colored red bar. All right, if you think that's a little bit too complicated, it's really simple. So here's our red bar right here. The minute we see the first red bar, what we want to do is once this bar closes, not while it's still active, but once it closes on the day, here's where we want to buy. So the next day, This is the previous red bar. The next day, it needs to trade above, and that's when we'll buy. Now, it doesn't mean it have to close there. A lot of students always say, well, Steve, it traded there, but it didn't close there, so I didn't buy it. It doesn't have to close there. It only has to trade above the high of yesterday, the red bar. So let's see what happens on the next day. It didn't trade there. So you see how we never traded there? So we didn't buy anything. Now, this is where students have trouble. They go, well, I bought and it went lower, so I lost money. Remember, the rules state that you can only buy if it trades above. And also remember, this is a technique. It's not a strategy. This is simply a technique. So is this negated? Well, not really, because now we can simply move this down here. We're still closing above. And so the technique is still active. And now we move our entry down here. And this is the good thing about moving your entry down, because now if you had bought it at a higher price, now you can actually buy it at a lower price and you haven't lost anything. All right. So let's see what happened on the very next bar. Well, it traded there. Did it close above there? No, it traded there. So that's our entry right here. And remember, we teach you where to place the stops in the course. We teach you where to exit. We teach you how to track the trade if you like to stay it and follow it and track it all the way up. But just share with you what you potentially could have captured in the following weeks coming into November, 30 points. Now, did you hear me mention anything about an earnings report? Did I mention anything about support and resistance or volume or institutional trading? Did I mention anything about economic numbers like jobless claims or unemployment? No. I stopped listening to those things 44 years ago, all right? Now, I was trained to listen to those things just like everybody else. And guess what? I couldn't make a dime listening to those things. Now, if you want to, feel free to go ahead and listen. But I'm just telling you, as an instructor, as a mentor, there's no reason to. There's absolutely no reason to. So this was not based on anything other than market behavior, learning to listen to the market. Now, let's say you want to apply this to the downside, all right? We just do the same steps, we reverse them though. First thing, obviously, is to plot the buy-sell line, the 50-period moving average. So on our platform, we're looking at an older chart of Zoom here in November, plot the 50. Now we ask ourselves, where is price in relation to that? Now, is it above? No, it's below, right? So I don't care what anyone tells you. I don't care if someone says, well, yeah, but look at this, this is a bullish engulfing pattern, or this is major Fibonacci support right here. Or according to this Elliott Wave 5, we got to make brand new highs. Remember, those are all outside sources telling you what they think the market's going to do. Once you learn how to trade on your own, you never really need to listen to anything anymore other than the market in front of you. So the market in front of you is telling us that this wants to go lower. Why? Because the overall trend is down. And someone would say, but yeah, but Steve, but look at it, it's been going up for the last 3-4 days here. Well, that's great. That's a selling opportunity. If you want to sell, if you want to buy puts, don't you want to sell when price is going up? You get a better price. So you have to change your way of thinking. All right, that's just the overall trend. Now we want to make sure what the short-term trend is doing, which leads us to step 2. We plot the PET-D. On our platform, it's as simple as clicking on PET-D and the colors change. Now, you see how all these bars were red, even this up day. We have an up day here. This is where students get confused. They say, well, how can an up day be red? It's easy. It's just you had an up day, but you're still in a short-term downward trend. Think of the temperature, the weather. I always give this example to make things easier. We are now in the middle of winter, all right? I live on the West Coast, and right now the temperature is about 55, 60 degrees. Every once in a while in December or January, we'll have these days where it's an Indian summer where it'll be 80, 85 degrees, all right? Does that mean that winter is over? No. Just an aberration for 1 or 2 days, and then it goes right back down to 50, 55 degrees, okay? It's the same thing with this. Just because you have a red outline on an update does not mean that the short-term trend is going to be up. We need that to be colored green in order to tell us that the short-term trend is up. So we have a short-term in sync with the overall trend, but right here is where we have conflict. Now the bars start to turn green. But that's okay. This is setting us up for this technique. Remember, a technique is not the same as a strategy. I know we have other strategies like strategy number 4, strategy number 5, that are based entirely off different rules. So this has nothing to do with them. This is just a technique that we're exploiting the PET-D and a certain pattern. Okay, this brings us now to step 3. Now, as long as price remains below the 50-period moving average, we're going to sell when price trades below the previous PET-D green bar. All right, so we have our first green bar. This is where we buy below here. But on the next bar, we never traded that down that low. So we didn't sell anything. So now we move this up to here because now this is our previous green bar, but now this is going to be the next setup. So we see here on this bar, did we trade below there? No, we didn't. So now we move it up a little bit to here, and we're still below the 50-period moving average. And the very next bar, we traded and we got short, okay? Now, none of this is based on earnings. None of this is based on economic news. None of this is based on Fibonacci support resistance levels. None of this is based on supply and demand. We're just listening to the market. Had you sold there on the 18th of November, potentially you could have captured 80 points to the downside, okay? Do you now realize why I don't listen to those things? Because they're too subjective. Remember, we want to take subjectivity out of it. They're not simple, okay? They're not simple at all. They're too difficult to figure out, all right? They're not consistent either. They're not consistent at all because sometimes they work and then other times they don't. I can't tell you how many times I was on the floor and some great earnings came out in a stock and it went straight down. You've all seen that before, right? Or some terrible news came out on the market and it went straight up. So those things they're just not consistent. And finally, this is translating what the market wants to do. It's making me a part of the process. I'm deciding to move my entry up. I'm involved in the trade. This is how you become a consistent trader. Okay, so let's look at some recent technique examples of what I just shared with you. You now know the process. Let's go through them really quickly so you can get some more examples. And remember, once again, this is a static PowerPoint presentation. I don't have access to live charts right now. So if you're looking for examples of, I see a number of people have asked, can you show me this? What does Apple look like? What does Facebook look like? Remember, I'm just teaching you this technique. It's up to you, once you become a student of mine, to research those on your own. Everything you're going to be seeing today is displayed coming from our platform, the PTS Primo charting platform. I had the pleasure of developing this with Pro Trader Strategies, my sister site. I'm really proud of this because it's taken over 4 decades of all the things I've accumulated and worked with, and it's all in one place. It's like having your own personal mentor sitting right next to you because everything is one click away. These things that I've held for 4 decades now, I had to write down, I had to use a spreadsheet, I had to click and use a hand calculator. We made it so simple that it's one click away. All you have to do is click it on and it's right there. This is the PTS Primo charting platform that teaches you how to trade. Okay, let's look at this example in Apple right now. This is in the middle of November coming into December. Price is above the 50. All the bars are green, but now we start to turn red. So on the first red bar, this is where we want to buy, right above it. But if we notice the second bar never traded that high. So what we do is now, since we're still above the 50, and remember, we're placing them above red bars, well, now we drop it down to here, okay? So let's see what happened on the very next bar. It traded there and it even closed higher. So you could have gotten along right here in the middle of November and coming into the first week of December, well, actually coming into the last part of November, you could have potentially made 15 points. That's a nice little trade in about a week or two, okay? And then look what happened. Had you not exited, you could have still stayed in the trade, or if you had exited, well, then you're looking for another setup because now the bars are green again. We're above, but look what happened. Now we have another red bar. So is this telling us that the trend has changed? Well, maybe, but possibly we can still use this technique. So we want to buy if it trades right there. And it did. So we went along at the end of November, our second signal, and could have captured another 15 points. All right. Once again, we're not looking at anything other than the chart in front of us. This is the source. This is the source of what we're trading. This is a source of where our P&L comes from. So this is what we're only focusing on. Why focus on anything else? Here's an example in DKNG, DraftKings, okay? This was in October coming into December as well. We are below the 50, so the overall trend is down. All the bars are red, so the short-term trend is down, but here's our first green bar. Okay, so does this mean the trend is changing? Well, possibly. but we can also enter right here if it trades below. See, we don't just want to take a chance and say, well, let's just sell at the close, because for all we know, maybe it is the bottom and it's going to keep going up. So we want it to trade just below the low of this green bar. And it did on the very next bar. Hard to see there, but it actually did trade. Look what happened, 20 points after that to the downside. All right. We don't care what the earnings were of this company. I don't even care what it does. It makes no difference. We're just looking at price. Let's look at LULU here, all right? Here's the 50-period moving average. All the bars are green. As you can see here, these are down days, but they're still colored green. So this is just telling you that the short-term trend is up. This is just a down day in a short-term trend. In other words, it's like in the middle of summer, one day in the middle of summer, it may be only 40 degrees. Does that mean summer is over? No, not possibly. Maybe it is, but we don't think so. So look what happened. Price went right back up. Just like summer, it'll go right back up to 80, 90 degrees. We have a couple more down days here, but then here's our first bar that's red. So we say, well, listen, possibly is going to keep going lower, but if it decides to turn around, this is where I'm going to buy. It never went there on that bar, so we keep on reducing it down to when it eventually enters, and we could have possibly made 28 points in 2 days. That's how simple it is once you are in sync with whatever market you're trading. All right, here's an example on Peloton. Okay, a lot of bad news about this stock. It's below the 50. The short-term trend is down, but then the short-term trend starts to go up. Now, starting with this green bar, we were shorted here, but it never traded below. So we move it here, never traded below, here, never below here. Here is the first place to go short, and we traded just there. So we would have sold Peloton at the end of October. Nothing really happened. It went down one day and it starts to go back up again. Well, listen, you still got a fairly good trade. You're not really losing anything. A lot of traders like to do what's called doubling up. They like to increase their odds for consistency by possibly increasing their size. So if you wanted to, you could have held on to this position, or if you wanted to, you could have increased it by using the same technique here, here, and once we traded below, added to your position. Maybe you bought another put. Maybe you shorted some more stock. Either way, this was a great trade. Look what happened. Coming into the first week of December, the stock was down 50 points. Now, obviously, once again, some news came out here that caused the stock to drop tremendously. But here's the funny thing. We don't even look at news. This technique is not based on any news at all. So someone would lend themselves to say, well, then how did you know? It's because it's been my experience that the market tells you just about everything you need to know. There's really no reason to look at news. As I said before, if you want to, you can look at it, but why? Why add something to your trading that will only confuse you more? So how did we know to get short days, weeks before the news came out? Obviously, because the market was telling us. It was being translated by the pet D. All right, we're looking at GME. All right, price is above the 50-period moving average. All of the bars are green. Even these down days are green. So don't get confused just because they're down. Don't say, well, I don't understand. Why are they green? Because they're just still telling you we're still in an uptrend. These are buying opportunities. But now we have our first red bar, okay? So is this going to go straight down? Well, we don't know. It possibly could. But if we want to apply this technique, this is where we're going to buy if it decides to go back up. And it did on the very next bar. And now you see it didn't close there. It only traded there and then closed lower. This is where students get confused and they say, well, Steve, I'm losing money. That's okay. You're still in the trade. You have to get a little chance to grow here. Had you exited because you got scared, well, you would have missed a chance to make 42 points in the next week or so. Let's look at BIB, all right? Now, once again, we are below the 50. The short-term trend is going lower. At this time, it decides to go higher. So we have conflict between the overall and the short-term. So we can take advantage of this. We place a stop here, 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 continue to move it up. And we still haven't got filled yet, but price is still below the 50. So that's okay. It's still a valid setup. And on the very next bar, we could have gotten short. All right. Now, this is a 270 price stock. So I know it's expensive. So most likely you would have bought the puts or some type of spread to the downside. And nothing much happened for the next 3 or 4 days. In fact, it starts to go up again. but you could have added to your position. Once again, use the same technique. Here's the first green bar after a series of red. So that's where you're going to go short. And you could have gone short again, so doubled your position. Maybe you have 2 puts now. Great choice because the stock fell 55 points, okay? Lastly, let's look at that chart we opened up the presentation with, AVGO. Remember, everyone thought that is not trained by our education and say, well, Steve, we're in a range market. Why would I want to touch this? You know, nothing's happening here. Well, to the untrained eye, sure, we are in a range market, but it's still telling us more information. Because once you add the 50-period moving average, the buy-sell line, that range is above. So even though we, yes, might be in a range type of scenario, you should be looking for buying opportunities. That's really the bias you should be having right now. But you need to add some structure. You just can't simply buy at the market. So in order to add structure, we apply the PET-D, and now it colors the bars either green or red. Now, when they're colored green, even though they went down here, see how they go back up? They're in sync with the short-term trend. Short-term is in sync with the overall, but now we have some red bars. So we can apply this technique. Here's our first red bar. It didn't trade up there. We lower it down to here. There's a buy right there. If we wanted to buy again, here's another green bar followed by a red bar. So we could have applied it again and bought here once more. And if you wanted to even be more aggressive, this is something that's a little bit more aggressive. If it goes lower, you can still apply this, even though it's still another red bar, and to add to your position. So you had 3 different scenarios where you could have purchased AVGO from the end of last month to the beginning of December and potentially captured 90 points in the following days, okay? Obviously, some news came out on the 10th that caused it to go straight up. I have no idea what that was, and I really have no interest in who would care. I really don't care if I'm long something and it goes up on some news. It doesn't make any difference to me. All I care about is that I am in sync with the source, with the chart in front of me. Okay, let's recap before we go into questions and answers. Remember, the 4 things you need in order to be successful with trading, with any market, any time frame, is that your plan should be non-subjective, all right? You see how all the things I just shared with you are very cut and dry? The buy-sell line. If price is above, you have a buyer's mentality. It's very simple. If price is below, you have a seller's mentality. It doesn't get very subjective, and you don't have to kind of sit there and go, well, I really don't have an idea what the market's doing here. It should also be very consistent, okay? There will be losses from time to time. I showed you a couple of examples where if you had a very tight stop, you would have had a loss. But if you waited a couple more examples, a couple more setups, you would have been able to make back that loss. It should be as simple as possible. Now, this technique I just shared with you, I just shared with you 3 setup rules. That's it, okay? It doesn't get any simpler than that. Now, in the course, we'll teach you different ways to exit. We'll teach you different ways for stop placement, and we'll teach you some different ways for entry as well. Lastly, it should make you a part of the process. Do you see how this whole time I was sharing with you how to enter, how to get into those setups? I didn't talk at all about earnings. I didn't talk at all about how something else is part of the process that is determining whether I should go long or short. No, I was simply making my own decisions based off of a technique that translates what the market wants to do. You saw an example of how to be in charge of your own trading. As a mentor, I really want you to succeed. I mean, it's in all of our best interests if all of us are very successful. There's enough for everyone to go around. There's not a finite source of profits on a daily basis. There's an infinite amount of profits on a daily basis. So why can't we all share in it? That's my goal, to teach you these things so that you can be successful and to take as much profits as you'd like. So ask yourself, there are only 2 weeks remaining in this year. Can you believe it? Just about 2 weeks. Do you think this technique can help your trading starting the next year, 2022? What if I could give you many more techniques using this and other edges that I have in our course? What if I could teach you about a strategy applied with this technique, a full-fledged strategy? What about different ways to enter, to place your stop? How about ways to apply options to this? Well, here's the good news today. We have a great special discount for all the attendees today concerning our stock college for 2022. We're going to present all of these things, and live classes are starting very soon within the following weeks. So we'd like to give you a heads up, and we'd like to offer you a special deal for this to become a student of mine in the Elite Stock Trading College. And here's one of the great bonuses we're going to be including with this. Everyone who signs up will get 12 months free a full year of the PTS Primo charting platform. That's an amazing offer because, as I said, this is roughly 44 years of all the things I've accumulated on the platform, and everything is one click away. Let me share with you what the curriculum is in the college that's going to be starting. It's 5 weeks of live training, I should say, of the stock trading college. In the first week, we'll talk about the foundation and the building blocks of stock trading. Now, I went over it a little bit in the beginning about our philosophy and what we really feel you should be focusing on and what we really feel you need to become a consistent and successful trader. And we'll talk about some more about that in week number 1, just to give you a great foundation for how we like to teach and trade. In week number 2, we'll talk about one of our most popular and successful packages. That's the dynamic duo. That's when we put together a strategy, one of our most popular strategies, strategy number 4, along with the Pet D, and show you how to use it and add to your consistency. In week 3, we'll talk about entries. I'll introduce you to steps 1 and steps 2. Steps stands for short-term entry points. And it's a great way to increase your odds for success by applying these entry points. A lot of our students have told us in the past, they'll say, well, Steve, I have a strategy. It's okay. It's not that bad. It's just that my entries are faulty. Sometimes I get in too late. Other times I get in too early and I scare myself and get out too early. So steps are high probability entry points that you can add to any method, any technique, and we'll show you how to use them in weeks 3. Now, we know we have a lot of option traders. We know a lot of you will say, well, Steve, these are too expensive to buy and sell these stocks, and I only trade options. Well, for this, we're going to offer you option trading week number 4 with Eric Wilkinson. We did this 3 years ago in our last college, and it was a huge success because people saw how to apply our techniques along with options. Now, if you're not familiar with Eric Wilkinson, he's our premier option class trader and as well as mentor at Pro Trader Strategies. As it says here, he's a veteran floor trader and has been trading just about everything: financial futures, commodities, stocks, stock indices, options on a variety of products for over 20 years. Now, you may have recognized Eric from CNBC, Fox Business News, or other financial networks. As I stated, he's our premier educator with options at Pro Trader Strategies. He will be conducting week number 4. And then finally, week number 5, we'll put it all together and we'll share with you how to use our dynamic stop tool. This is a new tool that I developed with Pro Trader Strategies that really does well with keeping you locked into a trade. Then how many times have you been in a trade and you've gotten out too early and you said, gosh, why did I exit? Why didn't I just stay in? This is where these dynamic stops are perfect for, to keep you in a trade as long as possible, okay? So these are 5 weeks of important information that has taken me over 4 decades to accumulate. You're all going to get in a very great and informative class with yours truly as your instructor. A year from today, after seeing what I just taught you, you just saw the tip of the iceberg in today's information. A year from today, you will have wished you became a member of the Stock College course for 2022. Here's how to take advantage of this, all right? You're going to be getting over $19,000 worth of courses with all this information accumulated, with all the things that are going to be inside the 5-week course. But let's break it down. We're not going to charge you $19,000. We're going to discount it down tremendously down to $54.95. But for all of you attending today, we're going to slash that down $500 more down to $49.95. Now, the good news is Pro Trader Strategies, who's in charge of all the discounting, the pricing, as well as the tech support, they're going to offer payment plans. So for a small deposit, you can still be up and running. You don't have to come up with $49.95. You can come up with a fraction of that and still be in the first class, the live class, and a student of mine, and just have a small monthly payment to take care of, okay? Remember, all this includes whether you decide to have a payment outright in full of $49.95 or the payment plan. All of this includes 1 year of the platform for free. So this is just a fantastic offer. You're going to get all this information in 5 weeks of live trading classes with me and a great price. Remember, you can set up the payment plan with Pro Trader Strategies. Here's how to take advantage of this. Contact Pro Trader Strategies at 310-598-6677. If you're interested in signing up right now, you can either do that online with the link you see below. In fact, let me just post that link really quickly on the chat box. It's just been posted on the chat box. It's a live link, so you don't have to copy and paste this link here. You can either go there or contact Pro Trader Strategies and purchase the course over the phone with them. Now, remember, there's absolutely no obligation. Pro Trader Strategies is very flexible. They'd be willing to give you a quote over the phone. There's no obligation to sign up right away. But this price discount and the payment plans are only going to be offered for a short time. And remember, the class does start most likely the first week of January. Okay, we're trying to keep it open to get some more students so that we can have a nice class for you. But the point is that don't be afraid to contact Pro Trader Strategies. They're in no way going to sell you something over the phone. They'll give you a quote. They'll be happy to work with you. They're flexible. And then you can watch the video and decide for yourself. I think mostly after you get a nice quote on the payment plan and you see this video again, you'll be convinced that you have to take this to increase your odds for consistency. Now, I'm going to leave this information up here as I take all of your questions. Remember, just go to the chat box. Be sure to, say exactly what your, maybe you had a question, something I went through 45 minutes ago. So just state what it was, and I'll answer them to the best of my ability. Okay. Let me just open up the chat box here. Someone was asking when the classes will start. Most likely, they're going to start roughly around January. Okay. We want to close the class because we don't want it to be too full. Now, right now we have a fairly good size. We'd like to have a little bit more so that there's good interaction with students. But once it gets to a certain point, it's closed, and we really don't want to make it that large because it's not, we want to keep it fairly intimate so that you'll feel comfortable asking questions, but at the same time, you can learn from other students as well, okay? Someone's asking, is there a guarantee? That's something you would ask Pro Trader Strategies once again, since they're in charge of all the pricing and the discounts. They're very flexible. I'm sure they would be happy to give you some type of offer, but that's not my forte. I'm more in charge of the teaching of the courses and the trading. So, feel free to call them or email them. They'd be happy to give you an answer on that, okay? Also, no, we can't offer free trials to the trading room because you're going to get the information that's in the course. It's not like you're, first of all, it's not a trade room. These are classes. We don't believe in trade rooms because, once again, trade rooms are basically crutches where you go and you listen to what people are doing, and that goes against our philosophy. A trade room is something that, in my opinion, you should never be involved in because watching someone do a trade and teach and showing them how you should trade is basically telling them that's the way to do it and you should follow whatever I do. That's not what we do. What we do is give you all this different variables and different ways to trade and then work with you so that you can decide. Now, we can't let you into the classes because we're going to be giving away that valuable $19,000 worth of information. And someone could have a full, course or two, or maybe a class or two, and say, "Well, no thanks. I think I've changed my mind." But you still have the information, so that wouldn't be fair to the other students that paid good price for that. Okay. See, other people. How long are the classes? The classes are anywhere from an hour to 3 hours long. So at minimum, they will be an hour long. I've been in classes that have been 4 hours before, but my voice usually starts leaving after about 3 hours. So I'd just say on average about 2 hours. Now, here's the one thing, they're all recorded. So if you cannot make that certain day that we're going to be giving the class, don't worry, you will be given a recording to the class where you can, watch at your own leisure. And, we realize that not everyone is able to be there and to see it on their own. Someone is asking, so how did this perform on this morning's MNQ? Well, remember, this is, I think, I don't know if you're the same attendee, this may have been someone else. This is a static class. We don't have access to charts right now. So this is something where basically we're just teaching you a technique today. Someone says, okay, if I can't make the classes, then how can I ask you questions? Well, everyone will get my personal email address. So let's say you can't make the class on a certain day, but you can only watch the video. That's okay. You can always ask me questions. Everyone gets my personal email address where you can ask me any question you like. And remember, you will be getting homework assignments. So, that's how I can only tell if you're progressing, if you're learning. And the one thing is I will never share your work with the class and I will never get out names or anything. Every student is just anonymous. But that's how we'll learn by looking at examples and, and they'll be on my charts and they won't be yours. And then basically we'll look, because most of the time, if you have a question or if you have something that doesn't make sense, most of the other students I've seen through my experience didn't either. So it's pretty much the same, but you'll be given homework assignments and then you'll roughly have to come back and show me your work and then we can see how well you're progressing. let's see, someone is asking, regarding your previous graphical trading scenarios where you place the horizontal dotted red line for sell or buy points, are these lines placed at the Z? I'm not sure what the Z means. Are these lines, can you define what Z is? When you say, are these lines placed at the, if you're saying, are they on the platform? Because yes, they are automatically on the platform with our strategies, but I'm not sure if you could define if these lines placed at the Z, okay? And then let me see, here's another question. Yeah, someone's asking about being able to contact me. Yeah, the personal email address is something you'll all get, and you can contact me whenever you'd like. So there's nothing to worry about if you can't make a class. Now, someone's asking also about the classes, when they will be. Now, usually we have the classes on a Friday, because that way you'll learn something during the Friday at the end of the day, and then you can use the entire weekend to research and go over the homework and figure out and see if you're understanding the process. So this is what's kind of worked well for us in the past. But having said that, we understand that not everyone is going to be free Friday. So we're basically, we do it by committee. If the majority of you would like to have it on a Monday morning, that's fine. If you'd like to have it before the opening, after the close, even if you want to have it on weekend, we've had weekend classes before. It's entirely up to you. I'll really do it whenever we can help you with, okay? Someone is saying we can only use your platform, and no, you can use this on other platforms you like, but why would you want to do that? It's so simple on our platform. See, usually what students do, our students have told us, and what I personally do is, if I'm entering a trade, I use the certain platforms like Metastock, TradeStation, MT4, Thinkorswim, NinjaTrader. That's the platform I use for entering the trades. Whereas to do my study and research and technique work, I will use our platform. So that's the beauty of that. You toggle back and forth, okay? Regarding your previous scenarios, when you place the line, are these lines placed at the exact extreme wick point level of the preceding candle? No, that's where you can use your own insight. Now, some students, the rule states above the previous bar, okay? Now, let's say you're buying. So it should be above the previous red bar. Now, that can be one tick, 1 unit of measurement, all right, 1 cent. So if the high of the previous bar was 55, then the first place to buy it would be at 55.01. Now, here's where we want you to become a part of the process. Through your research, in other words, through your paper trading, through your practice, through your experience, everyone comes up with a different scenario that meets their needs. Now, some traders say, well, Steve, in the beginning, I bought it 1 tick above at 55.01, and I saw that I got stopped out a lot in certain markets that I traded that were very more volatile than other markets. So I decided to put mine up like about 25 to 35 cents higher. And that's where I use it now. I'm having much better success. So I said, that's great. Then that's fine. Then go ahead and use that. Whereas someone else would say, well, Steve, with the markets I trade, no 1 tick is perfect. That's where I like to get in. Then I said, well, that's fine. Then use that. You see, these are not systems. Systems require that everyone applies the same exact rules on every trade and every setup. That's not what we teach. We teach basically like a buffet line. In other words, imagine you're going out to dinner and with friends to a buffet restaurant, okay? You head into the buffet line and there's different entrees for different meals. There's different appetizers. There's different desserts. There's different salad scenarios. There's different drink choices, okay? Now, everyone is going to pick what makes them feel comfortable, what they like. Some people like fish better than they like meat. Some people just want to have a salad. Some people are just going to have dessert, okay? But everyone's going to be happy with their meal. Everyone's going to be satisfied. It's the same way with trading. We share with you these high probability setups, but how you decide to enter, how you decide to exit, how you decide to place your stop is entirely up to you. That's how you become a part of the process. So if you want to enter 1 tick above, fine. If that works for you, after you've paper traded for a while, then great. But you have to come up with that decision, not us. You are in the buffet line here of learning how to trade, and that's what we want. This is our style of teaching. I know a lot of people are really unfamiliar with this, and they're saying, well, why don't you just tell me where to buy or where to sell? Remember, that's the way, myself included, we're all taught. We're just taught this is where you buy, this is where you sell. And why are 85% of all traders failing? It's because that style of teaching doesn't work. You have to enter, you have to exit based on your own needs, on your own style. The good news is we have 7 different ways to enter, 7 different ways to exit, 7 different styles of placing your stop. So you can choose from each of those, whatever one makes you feel comfortable, okay? Okay. Remember, people are asking like, well, you know, what if it doesn't work? What if it doesn't? Well, it's true. What if you buy a car and it doesn't work? What if you go to a restaurant and have a meal? You never know if something's going to work. But it's been our experience that the reason why things don't work is because people come in with a consciousness, with an awareness is basically show me what to do and tell me what to do. Remember, that's not our style of teaching. You're going to be, your rate of success and consistency is directly correlated to the amount of work you put in. After teaching with specialist trading and pro trader strategies for 15 years, we found that to be true with all of our students. Some of our students just want to be told, tell me what to buy or what to sell. And inevitably, these are the students that fail because they don't want to put in the hard work. You need to paper trade. You need to study and research and say, well, is this the right market I want to trade? After you've done that, we've seen that the students that put in the correct amount of work and research are correlated with the same amount of consistency. So there's going to be work on your part, okay? If you come in with a mindset already saying, well, what if it doesn't work for me? What if I don't like it? You're pretty much canceling yourself out already. You have to come in thinking that is going to work for me, and I'm going to put the work in to make myself a consistent trader for the very first time, okay? Good questions. Remember, this is going to be starting up within the next couple of weeks, maybe 3 weeks possibly. If you're at all interested, my suggestion is to call Pro Trader Strategies. If you're serious about taking this, your trading to the next level, call them. You can find out about any type of guarantee. You can ask them about setting up a payment plan. There's no obligation, but you have to make a decision soon because this is going to start very soon, and we don't want you to miss the first couple of weeks of live classes, okay? Okay, as we get ready to close here, I just want to thank you so much for attending today. I don't want to take up too much time of your Wednesday. As we are required to take one last look at our disclaimer, I just want to thank you so much for attending. I hope you learned something about not only about trading, but about our philosophy to trading and about how we want to educate you. But most especially, I really look forward to all of you becoming students of mine in the Elite Stock Trading College for 2022. Remember, most of you will say a year from now, I wish I would have taken that course, because at the beginning of 2023, you don't want to be where you are now. You want to have progressed. Take your trading to the next level, invest in yourself, and become a student of mine, okay? Thank you so much for attending. I wish you all the best of luck and hope to see you in the course class. Bye-bye.